Hi everyone, and welcome to Macdulio's free algorithmic trading lessons part 1. Today we're gonna look at one of my most recent algorithms. It's not the most simple one, but it's a recent thing, and I got all the stats that I can show you. I call this algorithmic trading routine that is in MT4, which uses MQL language, which is very similar to C, and basically it's for Forex and was invented for one pair in particular, euro-dollar. Whenever you are going to engage in making an algorithm, which is basically an automatic trading routine, the first thing you do, or should do, I suppose, is make screen plots. That means that you're gonna first have an indicator, because the expert advisor would not be able to make these plots for you. On this screen that you're looking at, Angel Eyes, the routine, is making these plots that say sell and then T for target. So on this particular screenshot I have two of these calls, and so this is what we want to turn into an algorithm that trades by itself. I picked the name because of the rootlessness and accuracy that Angel Eyes was carrying out all the killings with, and the idea behind it is that once you have a call, you will always make it to the target. I actually made an entry on the blog, and I quoted Angel Eyes when he said whenever he's paid, he always makes sure that the job is carried out. So once you have your screen plots and you are satisfied that they appear where they should, and you feel like you want to turn it into an algorithm, then you start coding an expert advisor by bringing up the meta editor that comes with the MetaTrader. Meta editor is not merely an editor, it also has a built-in compiler. So if you hit compile, then you're gonna have the routine compiled for you, and that's how it goes. No errors, no warnings, and milliseconds. So like I mentioned, the structure was basically inherited from C, and you got this initialization section where you define, for instance, arrays and other values, string double, whatnot. There's an init section that I'm not doing anything with the init. These are just coming with the I guess the empty file. The start section has an initialization where you fill up the arrays with values. Sometimes they're zeros, other times they are empty values. Okay, going further down, the first thing this routine does is figures out the net long order lot size and the net short order lot size. This is for calculations later, when you want to figure what to open with. You want to know what is open already, in case you are also trading on the account manually. I do a lot of things on 30-minute RSI values, I always use price median, and it's always too simple. The reason why it is a separate cycle is you're gonna come to see this if you're dealing with these issues. If you don't fill up this array beforehand, that might cause problems later down the road. I actually don't need the brackets here. Okay, next thing, I'm calculating the 3-day average true range, well, starting with 1 day back, 2 days back, 3 days back, divided by 3, and then I fill it into an array, just the same values for calculations. So it doesn't matter what they were before, we're just gonna go back with the current value. Next cycle fills up p-brain and pre-brain up and pre-brain down. That's purple brain, which is 3 times stretch away from the mean. That's 3 fluctuation maximum. You could see the fluctuation maximum was calculated from fluctuation size, which was 32, and the maximum is 6/5 of that. So yes, I could have written 38, yes. Now next thing, fill up E16 array. Angel Eyes basically comes alive when the market crosses over E16, which is measured on 60-minute values. This is kind of unnecessary because I can just I think this because of the screen plot, because I wanted it to show on both on 30-minute and 60-minute. It is actually unnecessary. I could just leave it like that, and I'm still calling it E16 because we always relate back to 1 hour values, but as you can see on half an hour metrics you actually have 32 EMA instead. That's kind of like a brother with a little bit more value, so a little bit more smoothing. Yeah, I can just leave this in like it is. What you're gonna be making sure of is you're gonna want to put this EA on a 30-minute window only, and don't change the matrix because that might throw things off, especially if I put some zero elsewhere. Okay, let's proceed. Okay, the weight calculation comes from choppiness. Don't want to go deeply into details, but basically what this says is when the market has reached full charge based on 6 times 4, so a 24 sample, then the weight would be the average. That's why I'm calling the consolidation weight because it's a weighted value. Okay, I'm using this plus the current average true range to figure a high buffer, a low buffer, blah blah blah. Now let's go back to the screen plot for a second. So I called this line low buffer 4, and was it 3 and this was 4, something like that. Okay, let's scratch that. So low buffer without number, which is basically low buffer 1 and low buffer 2, goes like this. That would be low buffer 1, low buffer 2, and then we got low buffer 3, and it's not even on the screen, but there would be low buffer 4. Okay, I just realized yet again something, that these things are unnecessary for the trading routine. So we could just do away with high buffer 3 and 4, and then all of these is unnecessary. Okay, so I ended up making a whole lot of modifications, but most of it were really unnecessary. There was one filter that I may not even need anymore. This line required the presence of all that other stuff that may not even be needed, and it's only on the long side anyways. So here comes the size calculation. I came up with these values for 500 to 1 account. Obviously you're gonna have different numbers here if you have lower leverage. This is the opening condition for long, and that's just the basic version. I get a few more filters that are currently not on the screen. There are some stochastic filters that I added later, and there is an hour filter. So I don't often use time filters or hour filters, but what you need to know about is this is not your computer time. This is the server time that the broker is operating with. The routine itself is really basic. It opens when a new 30-minute candle gets printed. So every half hour there's a possibility for an open, and you open at a market, so that leaves the broker to play around with slippage, of course. What else should I say? Yeah, the size calculation up here. I have a maximum lot size that was defined earlier. That's what I said was based on the leverage, and if you have longs already open, then you want to deduct from the maximum size. Maximum size is basically generated with account equity, so it's not based on the balance. There you go. So what this would do is it would open if the previous close was below E16 and RSI2 previous was below 7, and RSI2 current is larger than the previous RSI, and the fifth close was above E16 5 back, and the 10th close was above E16 10th, and the low previous low is larger than I high 5 and I low 5. These values are defined here earlier somewhere. Oh, so I high 5 and I low 5 is what I call Mr. Maroon, and of course it's a pair of EMAs. One is on the highs and one is on the lows, and here I'm referring to them as I high 5 and I low 5. I just took over the naming from somewhere. So basically this is referring to the middle of Mr. Maroon, and the low would have to be greater than that. These stochastic filters, I actually have a daily filter. That's also kind of unusual, but when you run a bunch of backtests, eventually you may find the need of further filtering, and that's when you start reaching after higher time frames. So daily, 4 hour, etc. And stochastic is one easy thing to reach after. So Angel Eyes is pretty much about having the target in mind and opening at market. So basically it has a fixed exit, while the open is a present condition, which should be happening every 30 minutes, so at 30 or at 0, whenever the clock turns, kind of thing. Now, for backtest purposes, and because you can't run on a backtest multiple programs at once, this one has a hard stop of 20 pips. Same on the short side, and the whole thing is pretty symmetrical, I would say, although the filters are a little bit different. For instance, here you don't have the hourly, but you do have the daily filter, daily stochastic filter. And then later what you have here is I ended up figuring a trail stop within the routine, so I can actually see it in the backtest, what would be fitting for it. So what this does is after Angel Eyes goes in, it locks in 2 pips, it says. Which is not true. So I had to correct it. It actually locks in 1 pip after being 14 to 15 pips in gains. Okay, and then there's a second part to this trail stop, and that would lock in 16 plus pips after you have reached somewhere between 16 and 17 pips of gains. So this one is actually correct. Now I show you some backtests. So this was I believe like the first time around I run it, and it had quite a few trades. Looks like I was only running it from January. Later I started testing from like December, but you don't have much data buffered in anyways. So what you see here is it figures, of course, the size, and then opens at market and puts in the target price, the stop loss, and then starts modifying it. That this is when the trail stop is adjusting the stop loss. It went from 75, this was a sell, to 57.8. So basically it locked in, as you can see, it opened 58.8. It locked in 1 pip when it was enough in gains, and later it adjusted the stop loss yet again, and here you got 16 pips locked in, and eventually you get knocked out for 16 pips of gains, and that's what you have here. And that's how the balance changes. Now after that it picked up a buy, and the buy was it went to stop loss and took the full loss of, what was it, 20 pips, yes. So anyway, this was a first pass. This is a different view, I believe it's the same one. As you can see, you got all kinds of things here, profit factor, whatnot, total trades, short one, and long positions. Looks like it took 2 losses and 2 longs. Now this is the snapshot of the current version, where it only picks up, based on history, 4 trades in several months, really, and they all make profits. Here you can see that the relative drawdown did not exceed 22%, and gains seem modest, but you need to keep in mind that these backtests are a far cry from reality, because especially when you're opening at market, because in history you only have like this digitalized values, and when you forward testing or running it in real time, then everything is lucid, and the market prints a lot of values that don't appear in backtesting. So for instance, I had routines where, based on the backtesting, I expected that the routine is going to open 1 or 2 trades maybe in a week, and once I started forward testing, it took 3 trades in like a first hour. So backtesting has its limitations, but the idea is that you can actually figure out your own trail stop, what would be fitting, for instance, and you can get an idea of how to. You can play around with values before you go, for real. Thank you for coming. Thank you for watching this video. Let me know if you're interested in finding out more about algorithmic trading and things I think and things that I do. I would put in the description below a link to the blog where I discuss more about the angelized screen plot. Please don't forget to like and subscribe. Thank you. Have a nice day.